Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, August the 8th, and want to take just a brief minute to discuss what markets did last week, as it was a down week in markets off of the jobs report we got and the unemployment rate ticking up on Friday, with the S&P 500 finishing the week down 2.06%. The mid caps were down worse, down 4.13%, and the small caps were down 6% on the week, kind of unwinding the trade that had been happening and the momentum going towards those smaller capped and mid capped companies. Kind of unwound Friday, and then we got Monday's massive sell off that you woke up to in the marketplace on Monday. And I wanted to take just a brief minute to discuss a couple of things going on there and what is the main catalyst for that. So what has been happening this year as these hedge funds, a lot of hedge funds have been borrowing money in yen because it is very cheap. The interest rates in Japan are were very low. So hedge funds were going and borrowing money in the Japanese currency yen and buying stocks in the United States with those. However, recently the Federal Bank of Japan has been raising interest rates. And so what that has done is it's caused the rate of borrowing that currency to go up. And when you had to see what happened was a lot of these larger hedge funds had to unwind that trade. And so they had to sell their positions in US stocks to pay back the yen that they had borrowed, and before it became too expensive and they had lost all of their profit. So that started was the catalyst for a lot of the selling on Monday. But once selling kind of gets going, all of the negative things that you may think of, or the wall of worry starts pouring in, and the selling begets selling, and fears of the slowing U.S. economy crept in as well, and that's why you saw the market sell off as drastically as it did. You saw a 10-year down in the 360 range. You saw the VIX on Monday, which is the volatility index, spike 40% on the day. Now, Tuesday it dropped very dramatically as well, and we've been talking about for several weeks coming into this that we did expect some volatility to creep into the marketplace. We've had a lot of things to deal with. We have not had a significant pullback in quite some time in the equity market, so all that we're seeing is healthy. We got a 10% correction on the NASDAQ, which is your best performing index year to date, with your high flying AI mega cap tech stocks leading the way in the sell off. And so what you're seeing now is some opportunities in the market. We expect volatility to continue. We have increasing odds of conflict in the Middle East. We have a very volatile election cycle coming up in the United States that we're going to contend with. And so while the market is trying to figure out who's going to take control in the United States and which economic policies are going to be in power and who's going to do what, expect there to continue to be a little volatility through the end of this quarter. And historically, this is the most volatile quarter. August and September tend to be your most volatile months. Volumes tend to be your lightest, which leads for more spreads and for larger moves in the equity market. I know 1,000 points sounds like a lot, but it was just a 2% move on the Dow. So what this has done is it's just kind of reset some things in the market, and it's just right size probably where we need to be. We are still upwards of 10% in the S&P 500 year to date. It's a very great start to the year and great returns in the equity markets. So what we've done is we've looked and found some cheap stocks and said this is time maybe to pick some things up that have gotten beat down too much. So if you have some extra cash on the sideline and have had some watch lists and you're seeing some stocks go down, pretty big steep declines. I mean, we're seeing drastic moves, 20% sometimes in some names. And if you see some opportunities to pick up some names cheaply, we don't see any reason why not. So if you have questions about how to navigate this market and this volatility and when is the right time to pick up some names and when is it the right time not to, give us a call. We'd love to talk to you. You can reach us at 904-346-3460. As always, check us out online at www.riverplacecapital.com. Have a wonderful rest of your week, everyone. Thanks so much.